everyone, and welcome back to Mining Networks. I'm joined with Scott Nagel here, who is Director and Strategic Advisor for Western Resources Corp. So thank you for joining us today.
Thank you for the invitation.
Absolute pleasure. So let's start by getting a nice brief overview of the company.
So the company was formed back in 2007, 2008 under Western Potash, and they created Western Resources as a vehicle for growth. And Western Potash today is a wholly owned subsidiary of Western Resources. It trades under the ticker symbol of WRX in the Toronto Exchange. And it's basically a four-phase mine development in Saskatchewan up by Regina for potash production. And we're currently in phase one build of the mine. Will be complete here soon, and then we're looking at phase 2, 3, and 4.
So run me through the capital structure.
Well, so the capital structure, so the original founders ran out of money in about 2015. Tyree came in and contributed equity. And at that point, we're 26 or 51% owners along with the former owners, and continued to develop the mine. And then in 2019, ran out of funding and paused production, or paused development, I should say. And in 2022 and early 23, they brought in both equity and debt investors. The debt is APN Capital, London-based firm that contributed 85 million of debt. And then the equity investor is Vantage Chance, a Hong Kong investment firm that came in and infused 80 million of equity. So the 165 million, along with previous cash that Western Resources had, is basically fully financing phase one production.
So could you run us through the project funding?
Yeah. So the project funding, it's the original equity from the original partners, but both APN and Vantage were key to really finishing phase one production. APN contributed 85 million in an investment loan, and Vantage, Hong Kong-based investment firm, invested 80 million. And so when you look at the capital structure today, Vantage has 54% of the share ownership. Tyree now controls 26% of the shares, and then the other approximately 20% are then held by retail investors and others.
And could you give us an overview of the potash market currently?
Well, I can. The potash industry is essentially controlled by the Canadians, the Russians, and Belarus. They produce about 80% of global potash production. In Canada, it's basically three producers, large producers that produce in conventional mining. K+S came in recently and is doing some solution mining. But it's a very, we call it a oligopolistic market globally. And a lot of times you don't have a lot of price fluctuations like you do in other commodity sectors because of the tightly held control of production. In terms of, kind of peers, there's only, we talk about having innovative technology. There are other solution miners in the world. There's another horizontal solution miner in the U.S., but I would say the other companies that are performing solution mining are more vertical solution mining than horizontal, which we're performing.
So run me through the management team's experience and your own in terms of what gives you the expertise of running this successfully.
So I'll give the company a lot of credit. They've been able to attract a lot of talent, and I think it speaks to people's confidence in the mine and the technology that they're deploying. Bill Shu is the CEO and has had many years of investment background in the mining space. Mark Freccia former president of Potash Corp, which was very specific in the potash mining industry. He serves as the executive committee chair. And then when you look at the rest of the people that are in key roles, they're all fairly senior people with a lot of experience, technical experience in mining, engineering, geology. My background, I came from I recently retired from ADM, and as we'll maybe talk about, we signed the offtake agreement with them in 2018. So I was very familiar with the organization and believed in what they're doing. So I come with more of a kind of a logistics, trading and transportation type experience to the business.
So you've touched on there a little bit about the history of the company. Could you go into a bit more detail about that and also of the history of the Milestone project?
So the history of the Milestone project, was really the vision was back in 2008, and in 2012 and 2013 completed the study, the feasibility study on 2.8 million tons annually. The environmental study was approved, which was always a big step in mining. Then in 2018, ADM signed the offtake agreement, and getting product to market is always a very important thing from a mine. So that was a key milestone for them. 2019 is when they stumbled with the financing, and but did choose at that point in time to de-risk the project by doing some selective mining, where they for 18 months they sent basically the mining processes deploying similar technology that you have in the oil gas industry, where the fracking industry, where it's horizontal mining and basically sending sodium chloride solution heated into the ground 1,600 meters below the surface, which dissolves the KCl, comes up into a holding pond, and then naturally crystallizes due to a rapid temperature change. And that's a big difference between conventional mining, which where you're bringing up raw ore body to the surface and then processing. And if you've been in Canada or areas where there's potash mines, you'll see huge piles of basically salt tailings on the surface. In this case, all the sodium stays beneath the surface. And then in as I stated in more recently, the capital structure was solved, and the commissioning of the property will happen in 2023 or June of 23. The only two areas left to finish construction are the wellhead and the processing facility, and fully expect in Q4 of 2024 we'll have finished product for distribution.
So remind us, what is the project resource and grade here?
Well, the resource grade, or the resource is 5 million metric ton of resource, and the grade is, each vein is a little bit different, but it averages around 21% K2O. We're not really going after a different vein than anybody else that's mining potash in Saskatchewan. So from a quality characteristics of competitors, it's very similar grade product.
Run us through the economics of the project.
Yeah, sure. One of the more important things when you're in a mining business, especially fertilizer, is understanding where you sit on the cost curve. And there are many organizations that will go through and figure out what each plant costs to run, both CapEx and both operating costs. Because in commodity-based businesses, we will run into supply and demand changes that will force companies to, either speed up production or slow down production. And you clearly want to be on the left to center of the cost curve, which we are. You can see we're significantly lower capital costs, which I stated before, and then including our operating costs, we're left to center, which I think keeps us in a competitive position long term when we go into supply and demand variations. The capital cost to the project is 198 million, and we're greater than 75% complete with the construction. The annual production is 146,000 tons. And as stated, we plan to replicate phase one and phase two, and we may see, a little bigger growth in productivity in phase two. The financial returns, the NPV at a 8% discount is 198 Canadian, 198 million, and the IRR is 20.4%, which provides 40 million of annual after-tax cash flow and a 40-plus year mine life. To the local economy, there's $80 million of direct investment, of construction at the site. There'll be 30 million, ongoing annually that will contribute to the economy through jobs, and many people employed in the region. And then, of course, focused on supporting the region and the local community.
So run us through how you're processing the potash and how this differs from the traditional ways.
Yeah, the traditional ways, it's a mine shaft where you take heavy equipment down and you mine product like you think of mining, and you bring up raw ore body, and you end up processing it through chemical separation, which uses more energy, more water, and environmentally you leave all the salt tailings on the surface. In solution mining, you send a heated sodium chloride brine solution down into the vein. The sodium chloride dissolves the potassium chloride, which then comes up into the holding ponds that you saw in the earlier slide. The rapid temperature, the temperature is about 60 degrees Celsius, and that is the other advantage of one thing that maybe differs in this region is the ore body temperature is 60 degrees Celsius, which does provide more efficiency and production to potash, to the potassium chloride. But then when it's in the holding pond, it naturally crystallizes. It drops to the bottom of the pond, and then it's dredged, and it's dried, compacted, and then sent for distribution. I maybe missed, in the conventional method, you have to have a crystallizer, which is expensive, again, which requires heat and energy to crystallize the product.
So how do you adhere to best practices and differentiate yourself from an ESG perspective?
One of the biggest differences that I think I've already stated it is the salt content that stays below the surface. I think is a big deal, where the tailings are all underground. And as farmers today are all starting to have to look at their carbon footprint, and I think this will be one of the first mines that you can actually differentiate the production method and will have a different carbon score than other conventional mining practices. And I think that's a very important thing that we'll leverage as we go forward. And then the other big component in really all processes of the production of the case of potash is really the energy use, and the water use is less.
And you mentioned that phase one is now pretty much complete. Could you talk us through the kind of project development progress and what the future looks like in terms of phase 2, 3, and 4?
Yeah. Well, phase two, we're soon looking at starting phase two. We're confident in the technology and the completion of the mine now that we have, the funding source completed. So we're ready to start looking at phase two. Phase 3 and 4, we're looking at something significantly larger in terms of production. I think it's still to be determined, but we have the resource to potentially do 1.4 million tons for both phase 3 and phase 4. Phase 1 and 2 will be, in total somewhere around 300,000 tons. We think it could be a little bigger than that, depending on the efficiencies of the plant, but that's what we're targeting for phase 1 and 2.
So what can you tell us about your neighbors and infrastructure?
Well, in that region, the other big companies up there that have been mining potash for years are in our proximity, and they're they're mining the same resource and same veins that we're mining. So, I think if people have a concern over the resource or the grade, we've done our testing. We don't have any concern about the resource in that region, as others have been mining in that region for years.
So the plan is to go into production in 2024. So talk me through why you've been brought in and kind of how your expertise will help with that.
So, the mining industry takes a long time start to finish. This project started in 2007, and the bulk of that time frame is the permitting and the technical side and the engineering side of the business. And now with the financing complete and we see the end of the road, so to speak, to now seeing production, it really turns into the commercialization of the business. And that's with my background at ADM, that was my expertise, and I think what I bring to the table to help now make sure we effectively and efficiently bring the product to market. With that being said, the agreement we signed with, well, they signed with ADM. ADM has the exclusive rights for distribution in North America. There'll be some limited distribution in and around the mine, but it's the soil types there aren't heavy application rates for potash. The ADM facility ADM built a facility 10 miles from this location. So the product will be trucked to that facility. That facility is connected to Class 1 railroad, CP rail, and the highest potash consumption states are Illinois, Iowa, Minnesota, Wisconsin, Ohio. It's really in the heart of where CP has access to take product to, and where ADM has good distribution with warehousing and sales. So a lot of times I think there's concern once you get a project done and built. Now, what do we do with it? And I think that's the least of the concern now is actual distribution with a company like ADM is very solid and sound.
But it sounds like you've got an exciting and very busy 18 months ahead. So thank you so much for your time today, Scott.
You're welcome.